Hello and welcome to Campus Mortgage. Today we will be discussing part 2 of a 3-part video series which will cover a review of IRS Forms 1065 and 1065 K-1. Caution must be used when including income that the borrower draws from as qualifying income. Ordinary income, net rental real estate income, other net rental income, these all may be used in the borrower's cash flow only if the business had adequate liquidity to support the withdrawal of earnings. For additional information and examples on formulating business liquidity, see Fannie Mae Selling Guide Part B3, Section 3.3-07. But for now, let's look at the Cash Flow Analysis Form 1084. In general, as an underwriter, you are only interested in the allowable adjustments for Fannie Mae, Freddie Mac, FHA, or whatever loan program you are underwriting for. It is always best to review the company policies or check with your manager. Let's take a look at this cash flow analysis form 1084. The form is broken down into sections based on schedules. If you move down to the form to number 7 and number 8, that is where the allowable adjustments for Form 1065 partnership income is calculated on the cash flow analysis when underwriting a self-employed borrower with a partnership interest. Note there are 2 years that's calculated because you have to have 2 years for self-employed borrowers. So you are able to calculate 2 years at a time. Now, if you look at number 8, there's A through I, and A is ordinary income, loss from other partnerships. B is non-recurring other income loss. C and D is your depreciation and depletion. Amortization casualty loss is E. F is mortgage or notes payable in less than 1 year. And G is non-deductible travel and entertainment expenses. If you look at the first page of the 1065, you will see each of these lines documented. So this page is the 1065 from the 1065 partnership return. This is where you capture your amounts and pull them over to the cash flow analysis. So A would be found on line 4. And you can see the instructions for the ordinary income loss from other partnerships at the bottom of the 1084 cash flow analysis form. B is from line 7, which is non-recurring other income loss. That will be detailed on an attached statement. Line 7 will usually give a number for the statement to review, which you will find towards the end of a 1065 tax return. Being the underwriter, I steer clear of other income if it is not needed to qualify, because documenting other income may be tedious and probably difficult to document as continuing. An example I've had as an underwriter for other income is maybe a convenience store owner. They have the lottery machines in the store, and they receive income for that. Now, I was able to document that they have had a history of receiving income, and also got a letter from like the CPA stating that it is likely to continue for more than 3 years. So that is an example of other income. Some other incomes, it may be an income they only have one time. It may fluctuate. It's just something that's very difficult to document and to confirm that it will continue. So sometimes it's best just to steer clear of other income. And line 16C is your depreciation and depletion that can be added back in. Actually, line 16A is depreciation and 16B is depletion, but on line 16C, it'll just combine the income together. And this is just the actual page 1 that we just looked at, just a little clearer. This is where you would pull your income from to document on your cash flow analysis form. And this is where you would document all that information that you found. And then the Schedule L and the Schedule M1, Schedule M1 is where you would find the Schedule L shows the mortgages, notes, bonds payable less than 1 year. This deduction is not required for lines of credit or if there is evidence that these obligations roll over regularly and or the business has sufficient liquid assets to cover them. Documentation is required. And you can get that from a CPA. They will usually write a letter and state that the income is just is either a line of credit or it just rolls over each year, and that's a sufficient documentation. And the Schedule M1 4B, this is the non-taxable travel and entertainment that must be included. And at the end of the 1084 cash flow analysis, there's details for each line. And on line 8I on the 1084, it will give you your borrower's proportionate share of adjustments to business cash flow, which will be multiplied by their percentage of ownership. And last but not least, please take a moment to read our disclaimer. As always, the information contained in this video is time sensitive and subject to change without notice. For more tips, videos, and for a full list of courses offered by Campus Mortgage, please visit our website at www.campusmortgage.org. Thank you and make it a great day.